Sorry, test, test. All right, test, test. All right, cool. I'm glad you guys can hear me now. It was good, Ryan. It was good, Nelson. Who else is in here? All right, so now that you guys can actually hear me, what I was saying is basically in this one, what I'm going to do is go over some previous setups that potentially we could have caught last week on a couple different pairs. And then what we'll do is mark up the charts for this upcoming week, get ourselves prepared, and yeah. All right, so if you guys have any questions, as usual, you can go ahead and ask in the comment section, and we'll go ahead and get started. All right, so overall here I have GJ up. All right, and we can see on the daily, it's definitely been in a bullish momentum for a while now. So overall, we can see that we had some kind of transition up here to overall push this market back bearish, right? For a retrace, now we can see that overall our last higher low to a higher high is actually this push right here. So from here to here. Okay, now when price pulled back, once again, we're expecting a retracement and we actually got another bullish pushback upwards. So what we can potentially analyze is how we could have caught this sell-off and this drop right here. So as we know, when we're drawing zones, what we want to do is highlight the wicks on the top side. All right, so let's say we marked it off like that. Let's change the color. All right, so we'll do a light red. It was good, Jason, John, Conscious. I appreciate you guys for coming through. All right, so nonetheless, if we zoom in now, all right, so what we can see is price actually came back up to this level and we kind of played around there for a little bit. But overall, we did finally get that transition after a rejection on the H4 time frame, and then we fell. Now, just to put this into perspective, this fall was about 360 pips. Now, once again, I always preach as like, you know, being an intraday trader, like we only really need like 30 to 50 pips on one particular setup. So we could have taken advantage of this setup several times. I can also see after we got the break of this price action structure here, we could have caught sells off of these wicks right here, which is another zone. So let's change that to our normal blue. And although this gapped, what we can see is that basically with gaps, like I said, I usually consider them as candlesticks. So I'll also show you guys, you know, some ways that we can potentially even catch reversals from gaps as well. All right, so let's go over this first setup up here on the daily time frame. So if we drop to like the 5-minute time frame, let's see what we can find up there. All right, cool. So this is the interaction that created the push over here, and then we actually got the retest and excuse me, overshoot right here. All right, so as you can see, when we zoom in on the 5-minute time frame, we can see that this was a higher time frame double top. Now, what are we looking for when we get close to zones from, trading the actual strategy that I teach? Does anybody know? So if you guys know how I trade, it's basically a break, retest, and some kind of reversal pattern like a bearish engulfing or something like that. Now, what I want to show you guys is, number one, we need that trend line break after we get a tap, right? So we had a trend line here. And basically, after price broke out, number one, you want to look at how long this wick was, okay? So we had an extremely long way to the bottom, which is showing seller's exhaustion here. And then we get all these small candles, okay? So this did not give us a valid breakout and reversal pattern. We want to see price clearly break, retest, and give us a nice bearish engulfing, or something with a nice wick to the top. What's good, Malo? So this was not a valid setup for us, okay? Next, we could have had, a trend line here, okay, pushing up into the zone. Now we see we do get that breakout, but overall, we did not really get any patterns besides this extremely small bearish engulfing, which we could have taken, right? So let's say we took that trade right there. We could say on the bearish engulfing. Now this spiked all the way down to about 50 pips. Now for GBP/JPY, I usually put my stop above structure. If you are still new to the strategy, you can also put it above the actual zone. So we can see here 24.9 pips. We ended up making about a 1 to 2 risk reward on this potential setup. All right. Now, basically, after price came back into the zone, it decided it wanted to retest higher. So once you guys get more familiar with how price action works, you'll realize that the higher the time frame the zone is, the longer it's going to take for price to reverse from it. So if it's a daily zone, 9 times out of 10, H4 has to make a reversal pattern, which is what happened in this case. So on the H4 time frame, you could easily see that this was a double top for me for the transition of the daily time frame. All right, so nonetheless, as we track price now, we see the price pushes up into this level here, but doesn't really give us a trend line, particularly to take a trade off of for short. Now, one thing I always keep in mind, if I'm at a resistance zone on the daily time frame, I am not looking for any kind of buys. I don't care if price breaks above it. I don't care if it makes the nicest bullish engulfing. I don't care about it, okay? Anything after this zone has been tapped to me is sells. Now, the reason I think that way is because, number one, we're trained to think when the market's pushing hard in one direction, continue going that direction. So for an example, the market has been bullish for a while. So we are trained naturally to think, okay, once price breaks above the zone, buy it here and just continue it. Now we have to remember, this is the 5-minute time frame. So what this is on the 5-minute is going to be something totally different on the H4 and daily time frame. So this is going to be, a wick on the higher time frames like the H4 and the daily. So that's exactly what this forms. Now, if you correlated that with the H4 daily time frame, you would say, okay, now I know that we're potentially setting up now for a short. So what should you be looking for? Now, once again, you can go right back to the overall strategy and look for trend line breaks. So at C1, let me see, C1 here. So if you see point A and point B here, we can draw that trend line. And remember, you only need 2 points for a trend line. So we can actually see we get that breakout retest and a bearish engulfing here. Now, look at the difference in, how this broke out and how this broke out. Now, number one, we didn't break past support on this breakout over here, okay? Versus over here, we broke past this level of support as well as another one here. So that is showing that the sellers are coming in at this level very strong. All right, so it's, you have to pay attention to the little details as well when you're trading. All right, so next we can see we have a trend line here. All right, and so on. Now, let's look at what happened after we get this breakout here. All right, so let's say we put it above the zone right here, and let's say we take it short. Now, as you guys knew already, you guys seen that potentially we caught a trade for about 300 and something pips on this setup right here. Okay. Now, this is once again with a 20 pip stop in this case, or a 17 pip stop in this case, but we're up 95 pips and we're already at almost a 1 to 5.5 risk reward trade. Now, before we go to the higher time frame, I'm going to show you guys how you could have entered off of these other H4 zones. That way, you know, we can all go over them at one point in time. So overall, this is the price action that established the H4 level over here. And what you see is that price actually came back up to this level to retest, right? So when price came back up to tap this level, because remember, we want a H4 zone established, then we want it to push away, and we want it to come back. So as you can see, we have a point A to point B here. We draw it into the future. All right. So price pulls out, right? Breaks support here. We go up and retest. And right here is actually a bearish engulfing variation candlestick here. If you don't like that one, you could have waited for this bearish engulfing here. All right. So either one of those patterns would have worked in this case. All right, so let's take, we took the market there. All right, we could just put our stop loss above once again. So that one would be about a 30 pip stop loss in this case. All right, and down to the next swing low is over a 1 to 3 risk to reward trade. Now, keep in mind, if you're catching trades with the risk to reward of 1 to 3, you literally only need to win 30% of your trades to be profitable. So the fact that we're catching these huge moves in the market with nice risk to rewards is going to, you know, help us tremendously. Okay. Now, this next trade was a gap trade. Okay. So basically with gaps, the way I think of them as if they had candles filling them in. Okay. So basically all this is there was so much volatility when the market closed that when it opened up, it opened all the way down here. So just imagine this is all candles, but what the market's going to want to do is fill this area back in. Okay, so most of the trading that goes on through institutions and banks is all based off of algos now, which are, you know, computer programs. So when they see a glitch, for example, which a gap would be in a sense, they need to fix it. They need to fill it. So what they're going to do is go back up, retest, so that price is now closed. Okay, so we had a gap from here to here with price. So price had to go all the way back up, close in this gap, and then it can continue its overall move that it wanted to do. So once it does that, we realize that we established a level of resistance. Okay, now once we establish a level of resistance, what we can potentially do is look for a trend line breakout just like the other zones and take the trade south in this case. All right, so what we're going to do now is go back to the higher time frame like the H1 to get a clear picture of that exact setup. All right, and you can see now we got the valid head and shoulder pattern drop here. So overall now, if I drag this down to the low, you can see on this one setup, we made 370 pips. Okay, and that's a 1 to 21.2 risk to reward. All right, so if you guys are trying to pass FTMO or anything like that, that one trade could have passed it twice. All right, we take a second entry that swung for 1 to 10. Okay, so this one trade could have passed FTMO for you guys. Now, this is why this strategy works so well, is because we're getting in at the turning points in the market. So we're minimizing what we're risking, and we're maximizing, we're maximizing our reward. All right, and just like I was saying in this case, remember with price action structure, right? If we keep rejecting from the same levels of resistance, showing signs of exhaustion to the top side, what we want to overall see is a rollover, right? We want to see price fall back under the zone. So we can kind of see that on H1 right here. We also had a price action structure break right here. All right, so in that area, we broke support or price action structure bearish. That kind of confirmed that we're going to continue heading lower here. All right, so hopefully this is making sense to you guys so far. If you guys have any questions, of course, let me know. Now, combining this information with, the stuff we went over last time and, the ones before that, basically, you can tie in, order blocks and stuff like that for continuations. So let's actually start on the H4 time frame. And what you'll start to notice is how all this correlates together, okay? So basically, we went over what order blocks were in the, I think it was 2 webinars ago. Basically, it's like these patterns, like bullish engulfing patterns, right? So if we were to mark off this order block here, what you'll notice is when price comes back to it and tries to break through it, it stumbles just like as if it was a fresh order block being created, right? So this is what happens a lot of times, and by understanding what's happening here, you can understand how to potentially take the setup in current price action, if that makes sense. All right, so basically when it comes to order blocks, what you can think of it as is a point in the market where there was equilibrium. And I talked about this on a couple other ones as well. But look at how long price sat in this area. Okay, from March, I think that's 18th, 12 o'clock to March 19th at 4 a.m. Okay, so it sat there that long, just moving sideways in equilibrium because there was enough buyers for sellers and enough sellers for buyers. Now, once we broke out from that level, once again, price has to find equilibrium. That's once again what happened here. We moved sideways for all this time before breaking out. So what you'll realize is the market is just moving in patterns. Okay, so it moves in ebbs and flows. So it does breakouts, but then it has to find equilibrium again. The market's always trying to look for that equilibrium, which are order blocks. So let's say that, see this one kind of, honestly, this market kind of just broke out. But if we broke that higher time frame order block, we can potentially look for price to give us entries and retest. Now you can see that our H4 zone that we established here was actually the best price we could have gotten in on the retest of that broken order block over there. All right, so you can see price continuing to fall. And what you can do is actually use order blocks to give you more confidence as far as which direction the trade's going to go. So overall, even though this is a very small area, now keep in mind this isn't an area I would take a trade potentially just off of this pattern on the H1, but the fact that we had a sideways moving market, this shows that price sat here for what, 6 hours? So if price sat there for 6 hours, this is equilibrium. And even though this is the 1 hour time frame, remember, it doesn't matter what time frame you're on, the market is doing the same thing across all different time frames. Okay, so this was a level of equilibrium. Now, once we broke under equilibrium, right, we expect to continue the overall momentum of that higher time frame move. All right, now once we create another order block, For example, here, this is a bearish engulfing, so this is another order block. Once we create another order block, this is giving you confirmation to hold your trade. Okay, this is giving you confirmation to hold your trade because now you have something protecting you. So I know a lot of you guys are probably wondering, like, how do you hold trades? How do you know when to take profit, etc.? Now, if you check right here, once again, we established a minor level of support, right? Now, this bullish pattern is actually an order block as well. Okay. Now, we're on a retrace, so I'm not too worried about these bullish candles forming. I understand that price can come all the way up to this resistance here before actually breaking H1 structure. Now, the fact that we close right back under this order block is telling me that the market has so much bearish momentum, it wants to continue going south. So now I have this order block protecting me and this order block that was broken and retested as resistance, as confirmation to hold my trade. So as price continues falling, we see that price just continues making these levels, right? It's almost like Legos where price breaks through, retest, breaks through, retest, and it does it over and over and over again. Now, I want you guys to see what happens when the market's ready to basically switch. So basically, when the market hits a level, a higher time frame level like the H4 daily, basically what's going to happen is it's going to form some kind of reversal. Now, for daily or H4 to reverse, H1, M30, M15, M5 have to reverse as well. So how do you think it's going to do that? It's going to do that by breaking the previous order blocks and price action structure. So as you can see, here was the last previous order block that got violated, basically. So at this point here was the level that you could get out of your trade. Okay, this was the level that price action told us that this is potentially a switch. Okay, so the difference in this and this situation right here is this one was a bullish pattern. Okay, so this one isn't a to me, it's not a valid take profit because this is just showing a continuation in an overall retrace. Now, this one was an actual new structure level to a low in price action structure. Okay, we went to a new low. So this means like on M15, M5, this was a lower high to a lower low. Then we broke structure here. Okay, so you could have been trailing your stop above this level here. Once you got tapped, you're out. Now look what happens. We almost got out at the best potential price possible because price was basically making a higher time frame pattern to push back up. Okay, now I'm pretty sure you guys can notice this is a double bottom for a higher time frame. And that is literally how you can potentially keep yourself from losing profits, on the market retracing fully on you. All right, so what we're going to do now is, mark up some actual current charts. We can pretty much use this strategy in all types of zones, right? Like an H4 break and retest. Honestly, bro, I don't do break and retest trades. I only take trades off of the taps of the zone, because if you're taking break and retest, then you're now potentially getting in late. And if you mean like break and retest where it's like this, where I would have my zone here and then we break it and retest it. The thing is, if you took the trade off of this retest right here and put your stop loss above, you would have been stopped out. Okay. But for us awaiting for H4 to create that new rejection on this zone here and then pushing away, then coming back and giving us the entry point, we could potentially catch the sell here. Okay, and it's a lot safer. So remember, the thing, a lot of times people are just very impatient. If you're trading the H1 or H4 time frame, like we just went over, look how long price was sitting here. This was probably 2 to 3 days, maybe probably like 2 days at most, that price was sitting here. Okay, so if you take a trade on the first hour, you potentially have to sit here through 23 to 47 more hours of fluctuation. So why not just get in when price has already told us it's ready to leave? Same thing over here. So I don't want to be sitting when price is just in equilibrium and it's not doing much. I want to get in right before the move happens. And that's what the strategy teaches us how to do off the retest of these zones. All right, so let's go ahead and clear the chart and we'll mark up, current price action on GJ. All right, so as you can see here, we got a bullish engulfing. We can draw our zone off the wicks, but keep in mind, like I said, this is also an order block. All right, we also had a order block here that we actually passed. We broke past it. So this is telling us that there's a lot of bullish momentum in this market right now. All right, so let's go down to the H4 time frame and fine tune our zones. All right, so this one already looks pretty good. And then what we'll do here is we'll just bring that one up to the wicks. And now we kind of have our area of interest as far as like the far perimeters, okay? That's all daily zones are for us. Now, what we want to see is potentially where price can want to pull back to and potentially continue the ride upwards. So overall, I wouldn't really have an H4 zone at this point. Instead, what I would look for is potential areas that price can want to pull back to and create a new zone for us. So you can see price stumbled here for a little bit. Could have been some potential equilibrium or order block on a different time frame. So what I would be waiting for is for price to potentially either give us a pullback and close a bearish bullish pattern. Once we do that, I would draw my zone off of the wicks, and then I'll wait for a retest to it, and then I'll take the market bullish. If we don't get that, we can potentially just see price continue making higher highs and higher lows up to this overall daily zone at the top here. Now, since we did break, past this level here, which was the last lower high to this lower low in H4 structure, I do potentially think we can, go ahead and retest this level here. Overall, daily time frame is extremely bullish as well. So this could have just been a little pullback. A little break in the overall bullish market for GJ. All right, so let's see what else we got here. Yo, what's good, Dustin? What's good, Edwin? All right, so I'm pretty sure GU is going to look pretty similar here. We can see GU looks a little bit more bearish than GJ did. So overall, we can mark our wicks here. And we can also mark off this high here. Have you tried framing your entries with the dollar index? Yeah, so when I trade EUR/USD, I actually do frame my entries with the dollar index, but only with EUR/USD because that's the only one that's like almost 100% correlated opposite. The rest of them, like GU, AU, etc., like it works, but the thing is, if DXY is setting up right now, AU could have already set up or may not set up for another hour or so. And you potentially trying to judge it off of that can mess up your risk to reward, your stop loss can be thrown off, all kind of stuff. So only with EUR/USD right now for sure. All right, so overall we see that we are in a overall bearish push here, but we have formed some kind of transition here to push back upwards. So you can see we do have some potential previous support that could be used as resistance. But overall, I would be looking at this area overall to potentially cause some kind of retrace in price. Now, with that being said, basically what I would do in this case is literally just mark off this zone. This would be my zone for the meantime. And then let's say, price does make a new higher low here with a bearish and a bullish rejection candlestick, similar to, something like one of these. then my zone would now be from the bottom because we've now established bullish price action, okay? All right, so this would be a point of interest. Like I said, this does look like an area that could potentially push price down. Now, once again, it could just push it down to a retrace point so that we can continue going higher. I would correlate this definitely with the daily time frame as well. But for right now, it's showing that, you know, even looking at the wicks, you can see, yeah, this low to this high, this low to this high, this low to this high. We're still making higher highs and higher lows on the lower time frames. All right, so that would be my GU markup. Let's check out some others. All right, guys, so you can see on EU right now, we are pretty bearish. We have this head and shoulders pattern to push this down. So overall, what we can do is mark off this area here as daily resistance. And then what we want to do is find the next area that we can use as support. So I was actually breaking this down to a student earlier, and you guys could have caught a really nice trade on EU rejecting off of this zone. Now, once again, it just came from these wicks over here. Let me actually change the color. All right, and then what we can do now is just kind of fine tune, you know, the zones to the wicks here. And this gives us our points of interest. All right, this week is NFP. Do you still trade USD pairs? Personally, I've only been trading GBP JPY. I'm kind of just like day trading that one, and you know, it definitely produces more than enough pips. So I've just been focused on that one. But yeah, I mean, NFP, I think it's fine to trade before it. You may get some consolidation or, you know, some equilibrium because, you know, price is about to spike. So when that happens, you know, it may not be as much movement. In that case, you know, I wouldn't really trade it. I personally don't trade it as far as like actually being in a position when it's going on, unless I'm up at least like 30 pips and I move my stop loss to break even. But, you know, with FTMO and all that, you can't even trade news. Well, let me rephrase that. You can trade news, but you can't enter or exit a trade 2 minutes before or 2 minutes after the news. So let's say, you know, you're in a trade and NFP is spiking, right? And you took a sell. You can't exit that trade until 2 minutes later, which means you can potentially blow your account because you can't use a stop loss. If you get stopped out during that 2 minute window, it violates your account as well. So that's why I don't really mess with it. It's better to just, you know, have that peace of mind. All right, but nonetheless, so look at how perfect, you know, price came to this daily zone that we just fine-tuned from previous price action. Price came here once again on lower time frames, wait for the trend line break, retest, take the trade, and watch price flow away. It's really that simple. Like, we don't have to overcomplicate this. You know, price action is, you know, very, very simple. We don't need indicators. We don't need all that other stuff. All right, so overall, with this time frame right now, we can see that price established some new level of support and closed bullish. So this is an order block as well, both of these. So this bearish candle to bullish, order block, bearish to bullish, order block as well. So where I would have my zone currently is off of, you know, this wick right here. because we have established support, which means we're we're pushing up, we're retracing from this bearish push. Now we can look to the left and see that there are some potential areas that the market could stop at and want to reverse at. So we have to keep that in mind as we're taking this market potentially upwards. Now, if this market does decide to go back bearish, if we close back under this zone, I personally wouldn't be selling it at a daily zone, because you never know. Just like I said on the other chart, price can literally come down here, form a long wick, fill some orders from some banks or institutions, and spike up. Especially like you said with NFP coming up, it can definitely be like a setup, and not a good setup. I mean, like a setup to hurt your account. So yeah, I wouldn't really mess with any sales down here. I would more likely be taking buys, if anything. All right, so like I said, these are levels of interest. If we break through those, we can flow back up to daily resistance up here. Remember, price will always tell you what it wants to do if you know how to read it and you're patient enough. So this is another example of those order blocks, right? So if you sold it from, whatever, somewhere up here to the left, these are all confirmations for you to hold your trade. So we get a bearish order block here, we get the retest drop, bearish order block here, retest drop, bearish order block here, retest drop. You know what I mean? And you can see now we formed our first bullish order blocks here. Now, like I said, these are bullish patterns. In this case, going against our overall momentum. So in this case, I wouldn't really be too worried about them, but I would just keep in mind, okay, if price breaches this level now from the entry I'm holding from somewhere up here, I would potentially be looking to get out of my trade, because this could be a transition for the higher time frames. All right, let's check out AU. All right, so AU has established a new level of support right here. All right, and then the last little exhaustion level we had was actually off of that doji candle wick. Hey, what's going on, Linda? All right, Trader FX says we'll be adding an EJ to the list. Waiting days for setups on USD pairs at times just isn't cutting it out for me personally. Yeah, man, you just got to find what works for you. So like what I'm teaching can work on any time frames. Like a lot of my trades now honestly have been, hitting take profits within a couple hours, which I personally like. That way, I can trade between, a 5-hour, 6-hour window in the morning. And then after that, I'm done, have the rest of my day. So personally, that's the style I like. But there are some people who have better psychology for like swing trades, etc. All right, so as we can see here, we're in bearish momentum overall on AU. But what we can see is we had this minor lower high to a lower low here, another little retrace and then a drop here. And we actually closed above this level here. You can see that we are maintaining higher highs and higher lows on lower time frames based off the wicks. So overall, what I would be looking for on this trade is potentially more bullish momentum. It could retest something in here. As you can see, there's a lot of wicks, so sideways movement. And we also had a previous support over here that could turn into resistance. Now, I do see that there was a bearish candle here, and then we got a bullish push. So I would be drawing a H4 zone off of that level here. And if you guys actually, traded this last week, this was actually a setup for you guys to take. So hopefully if you guys traded it, you took it. But we got the bearish bullish push away from the zone. Price came right back to the zone and took off. So if you guys took that trade, you literally had no drawdown and price shot up for about 40 pips. All right. So This is how accurate the strategy is. You know, like looking back at trades, you can see how simple they are. Back test them and build trust in them so that next time you can catch them. Caveman, hi man, can you please elaborate how you determine and draw your order block? Please use a bit of dark color for visibility. So basically what order blocks are bearish, bearish patterns, bullish, bullish patterns, bullish engulfings, bearish engulfings, or candles that start strong impulses. All right, so just to show you some examples, this right here, this black candle is a order block. Let me turn up the opacity. All right, so this area was an order block. When price comes back to it, you can see that it rejected it 1, 2, 3, 4, 5 times, and then we went bullish for a little while for a retrace, and then we dropped. All right, so that is an order block. All the, like, basically order blocks, there's tons of them in the market, but the thing is, the best ones to potentially take trades off of are going to be the ones that cause impulses to happen. Also, you have to look at how long price stayed at the level of the order block, for an example. All right, so did price stay there for, 8 hours? Did it stay there for 10 days? You know what I mean? Like, that's going to tell you how strong this level is. So you can see right here, for example, we had order blocks forming, and then, price broke out of it. Price retested those order blocks and then dropped dramatically. Okay, so this was a level that caused this impulse to happen to a new low. So when price comes back to it, look what happens. We do get a little overshoot or whatever, but price falls to a new low from that level. All right, so that's basically how you can view order blocks in the market. And then basically order blocks are like building blocks in the market as well. So as price wants to go higher and lower, it has to build new levels of supply and demand to protect the old orders, but also for a level to get in at the best price for new orders. All right, so hopefully that's making sense to you. This is another example of a order block. Now this candle here caused this impulse to start. Okay, and this impulse made a new low in structure. So this little candlestick right here would be an order block. And you can see it gets retested very, very accurately. All right, so you can see when price came back and tapped that order block, it dropped and literally made a new low from that level as well. So by kind of understanding these concepts all together, like the zones, the order blocks, the price action structure, you can have a better view on where the market's going to go. All right, so here's another example of some order blocks. So you can see a bullish, bearish, bullish pattern that launched up. So if you drew a box around it, you can see price retested it again and made another bullish, bearish, bullish pattern. You can draw a box off of that. You can see price retested again, bullish, bearish, bullish pattern, and shot up. Okay, so basically you could have taken a buy trade off of, even these patterns here. So, bullish, bearish, bullish on the order block. When price broke above it and retested, you could have taken a buy there. Price breaks above, retest, buy there. Price breaks above this, retest, buy there. And then you could have rode it to the overall high on the H4 time frame. So it's just, a concept of supply and demand, basically. All right, so combining this order block strategy with the zones, we're basically just taking the trades off of these wicks because it's going to give us a higher probability, and it's also going to lower our overall stop loss size. All right, so for an example, we would have missed potentially this buy trade here, or no, I'm sorry, we would have caught the buy trade on this wick. It pushed up. It retraced here, gave us the zone. We would have caught. Actually, yeah, we would have caught both of these pushes. So basically, this kind of shows how, trading the wicks, trading these zones that we do actually correlates with order blocks overall. Now up here, I'm pretty sure this was a daily time frame zone as well. And even though this order block was here, price came back and retested it, we would have already been in on the wicks up here because previous price action, was up here. So we would have already been in on this sell, but it's just giving us confirmation after price made a new low. We have an order block protecting our orders if we wanted to swing this trade. All right, hopefully that makes sense for you guys. And then I'm going to mark up US 30 real quick and go ahead and ask you guys questions if you guys have any. After US 30, I'll probably wrap it up if it's no more questions. Also, guys, if you haven't watched the new video I just dropped, I'm giving away two $10,000 challenge accounts for a company by the name of Buoy Trade. They're actually a partner of FTMO. They are verified with FTMO. I did reach out to just make sure it was legit. And yeah, they actually fund traders for half the price of the FTMO challenge. You do have to do an extra evaluation phase, but this option could be good if you are trying to basically break into that prop firm trading, world, and you don't want to risk too much money yet. So check out that video and make sure you enter it. Like I said, I'm giving away 2 free accounts now, so you have 2 chances of winning. So yeah, good luck, guys. All right, so let's go ahead and mark up US 30. All right, John says, when I enter a buy trade from the daily zone and switch to the 15-minute, but on that time frame starts to form lower high and lower lows, would it be ideal to close in a small loss? And let's say 15-hour, 30-minute, and I can't read, and H1 all break upwards, but for some reason H1 breaks structure downwards, would be ideal to close in that small loss as well. So the thing is, when you're at a daily zone, price is forming patterns for higher time frames. So you can't focus too much on structure. So that's why I say, like, if you take the trade off of M3, once M3 breaks structure, go off of that time frame. Now switch to M5. Once M5 breaks structure, go to M15, M30, and so on. So you don't want to continue looking at the previous time frames because remember, M5 basically M5's price action range may only be 10 pips, while H1 is 20 to 30. So if an H1 candle wants to retest resistance, it's going to break M5 structure. Then you take your small loss, and then price drops back your way in the next 2 hours. That's what you don't want to happen. So I would say just take the trade. I personally let the trades hit my stop loss because if I interfere with it and then it ended up to be a win, that could be the potential win that would have made you profitable throughout this whole week. You know what I mean? So I wouldn't mess too much with it. You're definitely welcome, Cade, man. All right, let's jump into US 30 real quick. All right, so we'll mark off our resistance. We'll mark off our support. All right, so as we can see, price was going bullish, and then we started breaking levels of support to go back bearish. We actually have a zone here already based off the H4 time frame that could have been traded. So we can actually backtest that one real quick, and then this would still be how my my zones would be marked up in current price action too. All right, so as we can see, price established this zone off of a bullish bearish rejection. Price fell away and came back to retest. So once again, once we drop to a lower time frame, what I'm going to be looking for is a transition on the 3-minute. Yeah, of course, John. All right, so we can see price tap our zone here. It also makes a reversal pattern. So I don't know if you guys can see it, but a head and shoulders pattern. We also get a potential trend line break here. The thing with US 30, it is a lot more volatile than the others. So, the candlestick patterns will look a little bit different. But nonetheless, we get a point A to point B. Price tries to break out here. It doesn't give us a break, retest, and a bearish engulfing. So we push back in. We finally get that break here with a bearish engulfing. We get the retest, and then we get the confirmed bearish engulfing here. So that is where my entry would have been on this pair. And once again, there's no guessing to this. We're literally, just following our trading plan. All right, stop loss above the zone. And what I'm going to do is just switch to a higher time frame now. All right, I'll make sure to rewatch the live. Yeah, definitely rewatch it. Sometimes it takes a couple times for the actual concepts to, sink in. All right, so overall, if you took this trade, you would be, profit went all the way down to about 20 pips. So you would have hit about a 1 to 2 on this trade, and you would just be floating basically currently. But for an example, to this overall level of support right here would be about 25 pips or 250 pips. I forgot to calculate US 30. I don't really trade it. But all the way to our daily zone would be, let's see, I believe that would be 890 pips, I think. So risking risking 100 pips for 890 pips on this pair, you're getting like a 1 to 9 risk to reward, which is really good, especially on US 30 because it moves crazy. So yeah, that's how I would have caught this trade, and that was actually like a perfect entry. So hopefully you guys that trade US 30 actually caught that, and yeah, I would just be holding this right now. You could potentially move your stop loss to break even or something like that. But that's overall how I'd have my chart marked up for this upcoming week as well. All right, so do you guys have any more questions? If not, we can go ahead and wrap this up. All right, guys, so I'm going to go ahead and wrap this up then. Thank you guys for coming on. Hopefully you guys got some value out of this. Make sure you go back and rewatch it, see how, my insights on the market are, and, potentially apply it in this next week. Let me know how it goes. If you're able to see the market a little bit clearer, something like that, that would be amazing to hear about. So definitely keep me updated with your progress as well. Yeah, Ryan, of course. I'm glad to do it with you guys. I'm glad we can, go over this stuff together, get you guys' opinions, and get you guys on another level. I want to help you guys get funded and start your trading careers. Hungry. I actually already went over GBP USD, so go ahead and you can rewatch this after I close it out, and you can see me go over GBP USD, GJ, AU, EU, and some others. Alrighty, so thank you guys once again, and I'll see you in the next one. Oh, you're welcome, Linda.